right. Should be good to go. Let me get my life together. Let's see. Cool, looks like everything's working. Screen looks pretty cool. That's good too. Alright, it's lit. Should be starting in like 2 minutes. Alright, it's lit. Should be starting in like 2 minutes. Oh damn, I moved it. I haven't even looked at the candle yet. The weekly candle. I guess this analysis will be real time. Let me pull this up. Let me retweet this one thing real quick and then we're good to go. Pop that out. Bet. Let me see what that looks like. And hopefully I can get started. Bet. Let me see what that looks like. I hope I can get started. All right, so we are good to go. Gonna go ahead and start. We're gonna look. Hold on, let me send this one tweet. All right, we're gonna look. We're gonna see kind of like what's been going on. I guess in the last week of crypto. I'm actually gonna change to the Bitfinex chart just because trading with leverage can mess up the volume. So here's the monthly view. Here's the month of April. Very new candle, recently started. So far it's a doji. Not even like a very long leg doji either, just very uneventful candle. It seems like all of the price action has been contained since April started, really in this like, what is that, $1,000 range, right? It's been very trash. But that's not really what we're looking for. Really, oh yeah, I got my annotations. Really, we're here to look at the weekly candle that just printed. So the weekly candle is this joint. Oh man, oh, I changed my wallpaper, so now my circle's kind of weird. But I guess you can still see us highlighted. I'll make that purple. Yeah. So here's the weekly candle that we're looking at. This really kind of printed as a doji for the most part. Again, another uneventful doji. It doesn't even have a really long leg on either side, kind of like this. These wicks. This was an interesting doji. We had a lot of volatility, and you didn't hear, right? And so, I mean, money is to be made where the volatility is. So when you don't have any volatility, it's kind of like trash. But some people have been asking, like, whenever people see a doji, they tend to, reach for the low-hanging fruit. And they're like, oh, doji, reversal. Could be, but not really. This isn't a reversal doji on the weekly level, at least, for two reasons. The first being there wasn't a lot of volume. So what you want to see if you're trying to call something as a reversal, you want to see a hard sell-off, which we kind of had right here, right? And then once you get to the bottom, or the so-called, whatever you're trying to call the bottom of the sell-off, you want to see a lot of volume just push up, right? You want to see a lot of people engaging in that market, and that'll show you that, oh man, this price level, this price action was very pivotal. And we didn't really see that. It was kind of just like acceptance of the market going down, right? Market kept going down. Volume is just like uneventful. It's kind of like, oh, okay, this isn't too bad. We can just keep going down. This was a good example. This volume spike of the market trending downwards, and then it was just like, oh, absolutely not, right? A whole bunch of people came into the market, or at least not came into, but I mean, already part of, and their orders hit or whatever. There was a lot of buying happening here that pushed this wick up for it to close right here. And that's the other thing. This wick actually, like if you put a ray at the bottom of the wick before it, it didn't touch, right? Look at that. This area right here. That's not what you want to see. When you see a sell-off and you want to call it a bottom, what you want is for price to clear the low of this wick. You want it to come down in here. Let's see. You want it to come down in here, clear the low of that wick, and then pop back up. That's really what you want to see, because that lets you know the market tested lower prices, but it just, it didn't work, right? The market got there and they're like, oh, we don't really like this price. We're going to go back up on high volume. So you have a lot of people saying that, and like that's a sign of a reversal. So this, I wouldn't say this is a reversal, but I wouldn't even necessarily say that we're going to keep going down, right? This could just be ranging behavior. So then your next thing to look at would be like, okay, where are we ranging from? And where is resistance? Because we came down to support, but we didn't really test it for real. So I would imagine us revisiting this level again on a wick or something. A wick, as far as the weekly is concerned, it could be a whole series of candles on the 4-hour or daily. But yeah, so let's go down to the daily, because the daily candle just printed as well. So this is what we're looking at. It's very weird price action. So a lot of people have been like trying to call a wedge, I think, right here. And when we zoom into the 4-hour, I can draw it a little more clearly. But yeah, so we had a lot of volume here. This was a good sign for a reversal. And then this lower wick showed signs of weakness. And so if you went long off the close of this candle because you saw on the daily, oh wow, we got like this hammer, type thing. So there were 3 signs of weakness right here. All 3 of these candles. You could have gone along on any of them, but you have this one. This one had the high volume, more volume than the previous day, but the body of the candle isn't bigger than the previous day. And so that lets you know, okay, more people are coming in, but less is happening, right? There's more calls, but less effect. And so that lets you know, okay, might want to think about a long position here. Next day, you kind of get this. So if this happens at the top of a trend, this is like a shooting star. I don't know if at the bottom of trends you call it like an inverted shooting star, but I mean, that's pretty much just like what happened here. And the reason that this is a sign of weakness, some people will call it a reversal pattern depending on where it happens, is it shows buying coming into the market. So you see that we came up all the way up here on this wick. Even though we closed down here, it showed that there was a lot of buying happening and not a lot of selling because the lower wick is kind of small. And then this candle, okay, so this is like the 3rd day in a row. You're looking at this and you're like, okay, boom. This looks like a hammer type candle with a very, that upper wick is a little longer than you would like for a hammer, but the lower wick is critical because it shows, wow, the market traded all the way down here, cleared this wick, and then came back up. That would be a good signal to go long. This was kind of like a stop run for people who went long here and put their stops under this wick. This one took them out and then kept going up. So as far as the daily is concerned, it's really not too much. Kind of uneventful. You got this candle, very bullish. This one, again, no lower wick, very bullish. But this one had less volume than the previous day. So even for the past couple days, you see volume. This lets you know there's some type of consolidation happening. And so you should be trying to figure out, is it accumulation or distribution? Because literally since April 4th, 5th, 6th, 7th, 8th, right? Now we're on the 9th. We'll see where this volume comes from. But all the way from the 4th to the 8th, 5 days, decreasing volume, right? It lets you know, like, decreasing volume at the bottom of a trend lets me know I should be looking for accumulation or redistribution, right? There's only 2 types of consolidations. People tend to get these terminologies mixed up, so I'll kind of flesh that out. There's consolidation, which basically means you're going to see a decreasing volume profile, as you see here. And then there's 2 types of consolidations. There's accumulation. Accumulation will precede an uptrend. And then you have distribution, which is a consolidation that will precede a downtrend. And then subsets of those are reaccumulation, where you're already in an uptrend and then you consolidate and then go up more. So those are like your flags, your bull flags, your bull pennants, your bullish ascending triangles, etc. Those are those types of patterns. They fall, I guess, a falling wedge. It depends on the context where that happens, but those types of patterns. And then you have redistribution, just same thing as reaccumulation. Redistribution, where you're already in a downtrend and then you go sideways for a bit to continue going down. And that's really all there is to it. And so I see this decreasing volume profile, and that lets you know we're in consolidation, because when the market is trending, volume will go up, not down. And if it is trending on decreasing volume, that is a big red flag. So yeah, not too much really going on here. I don't know if this is a bottom. We'll go about like what might be the bottom later, but actually something I do think would be beneficial to show everybody. Some levels on the weekly. So here's one. And here's one. So we're very much in this range. And then, so these are weekly levels, right? And if we zoom into the daily, this is like a textbook Forex kill zone. And I posted this a couple of times on Twitter and my Telegram. So support, we'll just do that because I'm going to copy and paste this. So we tested a support there on that wick. We tested a support here on this wick, right? And then we broke it here. And then we tested it as resistance. Oh man, like that's that is a bearish scenario. So I can guarantee you a lot of people are looking to short this area right here. Let me highlight that. This area, I can tell you a whole bunch of short orders are going to come into the market. And so this will be an area of high volatility. We're either going to see well, I guess we're going to see that. We would see a scenario like this. Oops. Where we come up into the market and come down. Maybe we'll take out this wick right here. I'm sure a lot of people might have short stops up here for whatever reason. So we're either going to pull one of these maneuvers or we're going to pull one of these where we actually break that level. We come back down, test it as support, very classic, and then take off from there into wherever the next resistance is. This arrow, the length of these arrows are irrelevant. I'm just showing you like the type of price action you should be looking for. And this is where you would want to go long. Let me put that arrow back. This is where you want to go long. Okay. So that's really what you're looking at. I know I'm looking to short this area. I'm not looking to go long. I think this resistance will hold. The fact that we made a support here. So let me draw support zone. The fact that we made support here is kind of weird. I don't really know what's in that area. I guess if you pull it out. Nah, because this didn't even, it's like, yeah, I don't know. That was a very weird area for support to form. Yeah, but whatever. So that's why I really think like we should touch this level, at least 5.8. I'm not calling for 5.8. Like I said, we could totally just moon from here. I do kind of want to call 5.3 if we break about 6.3 or 4.3, excuse me. So if we break 6.3, I'm looking for a $2,000 dump, which is very ambitious, but that's just kind of what I'm looking at. So yeah, like that's hella important. I think people should be watching that level. If you're not watching that level, you're just paying attention to the wrong things. If the person running your paid group is not watching that level, again, you're paying attention to the wrong things. I actually have a long position open right now on BitMEX. So I see price going up, so I'm kind of happy. But I am going to short this level. So we'll see where that ends up going. I probably need to move my stop up too. But let's see what we have here. But yeah, this is really just like context, right? People kind of lose track of the larger picture. Keep in mind, let me zoom out even more. Like, keep in mind, like, this is where we're at. We were at a previous support. This was a weekly support, if you remember. Go back to the weekly. Right here, weekly support, and then a weekly resistance. And we tested that level here a little bit, but this was kind of a very irrational move down. We tested here, almost wicked to it perfectly, and then came back up. So, I mean, this is a solid level. And it's been around since October 30th, right? Since Halloween, right before Halloween. So keep in mind, like, the longer a level exists, the more important it probably is. Whereas this support level right here, we actually haven't touched at all. We created it on the weekly candle of November 6th, so the next week. And we haven't touched it. And we've come this low. You would expect like a solid touch of this level and then take off if you're looking for a bullish scenario. And if you're looking for a bearish scenario, and you really want to short, you're looking for a rejection of this level, come down, maybe test this, but whatever. You're looking for it to break eventually and then retest as resistance. So those are, I mean, when I tell you like go to your TradingView accounts, your CoinAG accounts, whatever you use to trade or chart, like mark these levels. Like this is a critical zone, very important. So, and they're just straight horizontals. You could totally, if you wanted to, put some. Let's see. Put some rectangles there. I support rectangles. I don't usually draw my rectangles like this, but for the sake of time, it's faster. So yeah, you could totally look at these as zones, right? If you would like to, and feel free to do that as well. So we're gonna do this kind of. This is the flow we're gonna do: daily, 4 hour, 1 hour, because those are the time frames I like to trade the most. Excuse me. So daily, 4 hour, 1 hour, and then in that we're gonna do cloud and then EMAs, right? So we're gonna look at daily cloud, 4 hour cloud, 1 hour cloud, daily EMAs, 4 hour EMAs, 1 hour EMAs. Because that's just really how I like to do my analysis, to look at kind of like where the bias of the market is heading. So if we're looking at the cloud, we're totally oversold. You can tell we're oversold because of the length between, like, look at that. It's like $1,300. Just a huge length between the Kijun and the Tenkan lines, and they're kind of going sideways. Lets you know we're ranging, lets you know that we're oversold. And so we should retrace up. So you should be looking for a retrace up if you're looking at the cloud to this level, which is kind of nice because it's kind of like an order block, kind of. So you're looking here where you had, you found some support here, consolidation here, and you dumped here, but we haven't retested this block, this level yet, and that's right where the Tenkan is. So you're looking to touch that. And then you would look, I don't know exactly what you would look for the Kijun to do. That would just be dependent on what we do when we get here. If the Kijun starts sloping up or down, that's kind of like where the direction of momentum is. So if the Kijun starts sloping down, basically the Kijun is serving as resistance. So if your resistance starts going down, think of like you're in a house and your ceiling is getting lower and lower, right? And so if your Kijun is sloping up, resistance is getting further and further up. So that's good for bulls. Let's look at the 4 hour. Oh, let's go through the checklist. You don't know about the checklist. So yeah, your cloud is getting freaking huge. This is ridiculous. So you have price under the cloud. You have a bear cloud. You have your Kijun over your Tenkan, bullish. This is a bullish setup, and your lagging span under price and cloud. Nothing says go long here. 4 hour, we actually cut up above the Kijun and actually made it support for a little bit. So that's kind of cool. And now we're kind of going up, and we have this flat cloud, which price may be attracted to. That may represent kind of like a 50% retracement of this whole move, which, yeah, it does, right? Almost perfect. So we might experience a 50% retracement up here. So that'd be good if you're a bull to about 7.8. Also makes sense because you kind of have like this block of orders right there, right? And so this could be a level that you kind of want to see price test. Not really oversold. You kind of have your Tenkan and Kijun somewhat close to each other. They could be closer. But oversold isn't like a reversal signal. I feel like a lot of people treat it that way. Oversold just means, or overbought, depending on which side of the market you're on. I may have misspoke a couple times before then, excuse me. But oversold and overbought conditions just mean that there's a lot of selling and a lot of buying going on. I think the term over is misleading. People have tried to quantify like when are you overbought and when are you oversold. It's very hard. You need a lot of things to let you know. Volume is probably the best thing to let you know you're overbought and oversold. But a lot of the indicators, that just means that the trend is strong. That's all that means. So yeah, look at this checklist. Bear cloud. Cloud's actually getting bigger. Price under cloud. Kijun over Tenkan. Lagging span under price and under cloud. This is a very bearish scenario. Nothing says go long. 1 hour. This is very interesting. And I noticed this, but like, I don't know why this didn't. I need a setup where I can just trade the cloud. I don't trade the cloud. I use it as a bias, but I don't really use it as, to trigger entries. But I should, actually. I really wanted to try it. But we're looking at the cloud. We have a bear cloud, but now price is above cloud. So that's kind of cool. Lagging span is above price and cloud. You actually had a bullish cross right here. The lines were aligned on at 3 a.m. on the 7th, and they crossed at 4 a.m. on the 7th. So that was like, if you were up 4 a.m. on the 7th, like that was a sign to go long. And so you'd be long from here, the close of this candle, and then you'd put your stop under the Kijun, because that's supposed to be your support. And you'd be, if we're looking at right here, you'd be in decent profit. Yeah. So that's pretty good. Your risk reward is trash. Right? But I mean, if you wanted to tighten up your stop, you would tighten it up like as you go. And here's the Kijun, and then here's the Kijun, and then you just keep putting it under the Kijun. And so yeah. So that's actually pretty good. The 1 hour is looking bullish. The 1 hour is looking bullish. And that's what you want to see if you're a bull, because trends start on lower time frames and they propagate outwards, right? I tweeted about that. So you want to see a bullish scenario on the 1 hour, and now you're going to zoom out and you're going to look for the 2 hour. Okay, you're looking for a cross, or the 4 hour, excuse me. Then you're going to look for a cross on the 4 hour. And then if this turns bullish, then you're going to zoom out again. You're going to look for stuff on the daily. And depending on where you want to take your trade, like that's how you would do it. So actually, if you trade the 1 hour, in my opinion, you wouldn't go long off of that cross, right? If you trade the 1 hour, you want the higher time frame to be in agreement with you. So if the 1 hour turns bullish, you need the 2, 3, 4 hour, whatever. You need a higher time frame to also turn bullish. So let's look at the 2 hour. Maybe it did. You have a bullish cross here, but you're in the cloud, so you wouldn't take this trade. 3 hour, not bullish. So yeah, there's definitely money to be made here. I'm not saying you can't be profitable, but you saw what your risk reward looked like at first. And you know, this trend line held here, so you were lucky to get money if you traded on the 1 hour TK cross. But you generally want like the higher time frame to agree with you, and then once this looks good and it's like, okay, bet this is agreeing with me, then you want to zoom in and then take your trade. You never really want to take a trade when the higher time frames disagree with you. So that's really what the cloud is, and that's just my strategy. I mean, you can do whatever you want. It's not my money. Looking at the EMAs, quick reminder: I use the green is the 50. This burgundy reddish color is 200. Silver is 150. Let me look. I forget. I totally forget. 150. Oh, I actually have another EMA I could use. Oh yeah, I need to turn that to the 120. Yeah, silver is 150. Orange is 90, I believe, and blue is 100. So those are the EMAs I use. So you can see we actually had a death cross. Everybody was looking at the simple moving average death cross. I really don't care about that. But the exponential moving average death cross was important to me, and that we got that. So this is like full on, bear mode. So if you're looking to actually take a short trade based off this, what you want to see is price break the 200 EMA, which it did here. Then you want to look for a price for the 50 EMA to cross, which it did here. And now the last step is you want to see a retrace back to the 200, which I'm assuming will be somewhere around here. And then you'll initiate your trade and then short from there. So like that's a dream scenario. I'm telling you, some people will take the trade as soon as the 200 breaks. Some people will take a trade as soon as the death cross happens. I think you should wait for both of those things and then short the retrace up to the well, I'm trying to remember. I think I don't think it's the 200. I think you want to actually wait for the retrace to the 50 and take the trade. Excuse me. So you want to wait for the retrace to the 50. Let me actually look at this. So you want to come up here. You want price to maybe consolidate a little bit and then take the trade there. So that's kind of how you want to look at it. You want to take it at the 50, excuse me, not the retrace to the 200. And that would be a good trade for you to take. But yeah, it's a lot of resistance right here. Nothing bullish. Nothing says go long. This is certified bear market. And we can see the death cross already happened on the 4-hour a couple weeks ago, about a month ago. So we see the 50 kind of served as some decent resistance here. Not really a clean one. And we're actually currently interacting with the 50 again. It'll be very interesting to see if we break this and then turn it into support. That's kind of what you want to look for in a bull scenario. And you see us approaching the 100. Oh, wait, hold up. Very fast. The 90 and the 100 EMAs. These are very close to each other, so this will be a good zone to short, which again lines up with the order block over here. If you're watching this. So yeah, like I said, many people will be looking to short this area. Let's see, in the 1 hour. So the 1 hour is kind of interesting. We actually have kind of pushed our way through all these resistances. And now what we're looking at is, it looks like we kind of made, so we made the 200-hour EMA support, but then we completely fell through it. But now we kind of made a support a little bit more, really traded low and caught ourselves and pushed all the way back up. So, and now it looks like we're really heading upwards on decent volume. This was a good sign because before this video, when I was looking at this earlier today, this is what I saw. Price going up, and I saw volume going down. Actually, it still is going down. So, I mean, this is not something I would like to take a super long trade off of. Like I said, I am long, but it's like a super, it's a small bag. I could get liquidated and not really care. But yeah, I don't really know. I don't feel too confident about this setup. This makes me really want to short. Because I don't see this. I don't see the bulls coming. Like they're not. Like look at this. Look at this volume right here. This was both of these volume spikes. Excuse me, my mouse is going really fast. But both of these, you can see this one here, and then this one over here. Huge, a lot of volume. Like it was Bear City, and now you're comparing it to this bull volume, and it's just like the buyers are not showing up in the market. They're just simply non-existent. So, I mean, this is good volume, right? Don't get me wrong. And so this is a good sign of strength, but you want to see it really dwarf the selling activity that was happening. And if I don't really see that, you know, I'm always going to be skeptical. Excuse me. And so, yeah, that's really kind of like what the EMA analysis looks like. I don't know if anybody has any alts that they want to look at, or if they have any questions even. If you do, then like now will be the time to ask those in the chat. I can't really think of too much I want to go over. The last thing is really about Wyckoff. So let me pull up that chart real quick. Oh, and a harmonic pattern that I found. Might as well show that to you all. Oh man. So this is like I'm betting everything I own on Wyckoff right now. Because I just really believe in this. So first let me show you Wyckoff accumulation and then images for Wyckoff distribution. Cool. So this is what we're looking at. and then that's accumulation, and then distribution. I want this distribution. Yeah. All right, back to the chart. So I said this is a case for redistribution. I've really been going hard on this chart. I've been tweeting it a lot. Like I'm telling you, I just really don't understand why people aren't looking at this. So basically, in redistribution, your phase A will look like the phase A of the accumulation cycle. Then you'll go sideways for a bit, and then you'll keep going down, right? This is the distribution phase, and then this is the markdown phase. Markets, like I said, only do three things. They only go up, they go down, or they go sideways. If it's already going up or down, you're too late. Like, let it go. You missed out. Try and get in on a pullback. If it's going sideways, you should be doing everything in your power to figure out, is this consolidation accumulation or distribution? That's really the only thing that matters. And so if we're looking at accumulation phase A, if I'm trying to make a case for redistribution, I'm looking for a downtrend. I'm looking for some preliminary support, a selling climax, an automatic rally, and then a secondary test. That's this. Don't be too concerned about the terminology. You can learn that easily, just like looking at the charts for a day. What's really important is like the behavior that this represents. This represents a trending market. It was trending downwards. We found some initial support, right? But then we kept going down at a selling climax, right? This was the climax of the markdown. And then once you reach this climax, you're going to see a violent reaction up, and that's going to be called your automatic rally. And that represents like people coming into the market because of this climax. They saw the super low price. They were like, bet, we're going to buy here. This is a great price. This is a wholesale price. Buy, 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 buy. You see big money coming in. That's where like the volume will let you know. And they're buying. And that's really what this automatic rally represents. And then you'll see a test of this area again, near where the selling climax is. It's going to come all the way down to slightly above, slightly below, just in the area of the selling climax. So if we're looking at Bitcoin, like that's literally what happens. We're in this trending market going downwards. We have some preliminary support, the selling climax, and then you see, look at this huge ass green candle. We were going all the way down, and where does this green candle come from? Like that's the automatic rally. And so we get up here, and then we have this secondary test. Boom. That's all there is to it. Phase A. So we know that we're entering some type of Wyckofian a consolidation period. So our next question is, we're looking for both, but we have to figure out, is this accumulation or distribution? So now we're looking at phase B. In accumulation, phase B, you're going to see a strength test that might be lower than what the selling climax was. You're going to see a lot of activity on the upper side of the trading range, right? So this whole area is called the trading range. So in accumulation, you want to see a lot of strength at higher prices. That lets you know that there's demand in the market. People want a higher price. People want a higher Bitcoin, right? Whereas distribution, you'll see a lot more activity on the lower ends. And that lets you know people want a lower Bitcoin, right? There's more supply than there is demand in the market. There's more people selling than there is buying. And so then when we look over here to this phase B, for my phase B, this is what I see. Pull an arrow out. I see this was kind of like the climax. And then, or at least of this area I have marked as phase B. This was the highest point. So from the highest point down to here, I see as we get lower, as price goes lower, volume increases, right? In my opinion, that lets me know there's more supply than there is demand. Now this, people might call a spring, which I've actually been meaning to relabel, which is a bullish scenario. If you actually look over here, a spring. This is what a spring would look like. It would look like you coming below the selling climax before you go up. I didn't really want to call this a spring just because of what followed. And this is really where I have my annotations. And this is like really what convinces me this is distribution and not accumulation. Not saying I can't be wrong, but again, I can only trade the chart that's in front of me. We see, look at this spike in volume. As price goes up, and I'll make this pink just so you can match the lines. As price goes up, volume goes down. I've been telling you all, volume divergence is the only divergence that matters. You all want to talk about RSI and all this other stuff, irrelevant, does not matter. As you want to look at the participants in the market. Are the people buying and selling doing so in confluence or in harmony with price? If people are buying and selling, but price isn't, reflecting that, then you should be very concerned. So we have buying here, selling here, buying here, etc. Buying and selling. We see that volume is going down, but the market is trending up. That lets you know people are not buying and selling in accordance with the trend. And that lets you know, boom, like you shouldn't have been surprised when we dropped, right? I know I shorted this, but this was definitely one of my more profitable shorts. But it really lets you know everything you needed to know. And so I have that here. As sell volume breaks this trend line that we have, it's more confluence that supply is dominant over demand. And so now, as we trend upwards, again, you want to see price go up and volume go up, but we're not seeing that. It's literally a repeat. It's basically the same fractal. Look at this. I don't understand why. Oh man, people just don't like money. A purple box. So this and this. Appreciate you, bro. Appreciate you. This and this, they're almost the same thing. You have price going up in this kind of like stair-step manner, but the volume is not supporting what price is doing. Like, this is what everybody should be talking about. Everybody wants to pull every indicator, in TradingView that they possibly can, but nobody wants to look at volume. I'm a big volume trader. I'm a big believer in Wyckoff volume spread analysis. And that's just because it makes too much sense, right? The participants in the market should be doing what price is doing, or they should be acting in accordance with that, or vice versa. Price should be responding to what the participants in the market are doing. We see price trending upwards. We see volume going downwards. I'm expecting another UT. If you're looking at Wyckoff, UT means up thrust, upward thrust, whatever. So I'm looking for another upward thrust right here, and then a test, and then going back down. So this is literally the schematic for my life right now. This is the only thing I'm looking at. And like I said, yes, I do have a long open, but it's a very small long because I understand we are in a distribution phase. This could break down at any minute. So I do think I may have called phase D too early. Not gonna lie. Something the schematic doesn't tell you, so you can have multiple up thrusts. The UTAD, the upward thrust after distribution, is usually the last one that you see, which, it looked very similar to this. That's why I marked it, but I'm probably going to have to readjust. I think we're still in phase B, which lets me know when we dump, it's going to be a major dump. Oh my goodness, it's going to be a huge dump just because we've been in consolidation for so long. It's ridiculous. Like a lot of people have been saying the market is boring. Well, it's like, yeah, because something big is about to happen. It's a quiet before the storm, if you want to be cliche. So I'm looking for this. I'll be looking for another upward thrust. I'd be very surprised if we completely just broke up out of this trading range. I'd be shocked, actually. I'd probably not trade for a week. I wouldn't really know what to do. But if we were to come up here and touch, I'll make this line red. If we were to touch that red line, I would be very concerned. I wouldn't really know what's going on at that point. Or really this zone right here I have marked as a resistance, this red box. If we touch that area, I'd be, again, very concerned. Or if we passed it. If we touched it, I don't care. But yeah, so this is really what I'm looking at. It's what you all should be looking at. Volume and price. It's literally the name of the game. People buying and selling, and then the market reflecting that. Last thing I want to look at is some harmonic patterns. I found a bear Gartley. Just to let you know what it looks like. It's not the largest picture in the world, but basically you have impulse move down, retrace up, a little lower to make a higher low, and then this marks where you want to short, and then it goes down from there. So pull that up. Oh, I have a lot of indicators on. So yeah, so this is what I'm looking at. I'm looking at this Gartley pattern. And this actually, it's funny that I said this because this is the red line I was talking about, that if we touch this, I would be very concerned or if we broke through it. So that's actually exactly where the Gartley says to short. So that's kind of cool. This box is kind of like a general area, depending on how conservative or aggressive you want to be with your short. But the actual like pattern, right where the D leg is, a 786 retracement of X to A. Right here is where you should short. So that's something to look out for. If we ever hit about 7.7, 7.8, just know a lot of people are going to short that. There's going to be a lot of selling coming into the market there. But other than that, it's really all I have on Bitcoin. If you want to ask like questions in the chat, I see some of y'all are here. Like, feel free to do so. In the meantime, I'll kind of look at Ethereum. I know a lot of people are invested in Ethereum. And that kind of, people like look at Ethereum for like what the altcoin market might do. I actually had an Ethereum chart. I don't remember where it was at. See, I can't find my Ethereum chart. Oh no, that's not good. Oh, because I was looking at it in US dollars. That's what I was looking at. Yeah. 1 hour. Yeah, a lot of eyes are on Ethereum right now. So let me go over this. Boom. So yeah, trying to figure out what this is. Again, I thought this might be a thrust. It does look like an up thrust. I don't think it's an up thrust after distribution because you see us coming up again. So I'm not going to call this phase C yet, but all this is phase B, which is cool. If I'm not mistaken, phase B is the longest phase. So I don't feel uncomfortable for both my Bitcoin and Ethereum charts saying like, reneging, going back and saying, oh man, this is Ethereum. Or this is a phase D, phase B, phase C, whatever. So this is kind of interesting. Very like almost a mirror image of Bitcoin where you had like this upward move, right, in that channel. And then, man, I hate that middle line. That upward move, and then volume just didn't match that, and you can saw that Ethereum dumped, stayed within the trading range. Like this is literally almost exactly what the Bitcoin chart looks like. And now we're approaching this resistance again. The interesting thing here is if you look down, we actually have this spike in volume here, but it's just pitiful compared to the volume we had before. So if you're looking to short Ethereum, this might be a good look for you. If we zoom out, Ethereum USD, look at it on a daily view. Actually, let's look at it on weekly. I think that'll let people really know what's going on. Weekly, I like my weekly levels pink. Let's see. That's basically where we're at right now as far as a line is concerned. And then if we're looking at a level, this is a good level, the wick of this candle, and then just pull that all the way out. So that's like really kind of like what we're looking at right now with Ethereum. We're in this consolidation zone. This is support, so this is good. What you do not want to see if you're bullish is a break of this line, a retest of it. Because I can guarantee if we retest it, we're not going to just recover unless, I don't even know, Bill Gates dumps his entire net worth into the market cap of Ethereum. But we're going to retest this line, and we're going to keep going down to the next level of support, which, I mean, could be here. Could be here. Around $150. I'm just saying, like, that's what's on Ethereum's plate right now. So it needs to hold this support. This test is good, right? And then if for it to trend back up would be great. But it's not. It wasn't looking too good for Ethereum. Now if we're looking on the daily, yeah, pretty much the same story. It seems that we actually had some resistance here. So let me mark this level up for you all, in case you're invested in the fate of Ethereum. So this seems to be some type of support that was given. Pull that out. Some type of support. And then we actually came up, broke it, retested as resistance. And now we're actually about to retest it again. So literally, you care about the next 1 or 2 days if you're investing in Ethereum. You want us to break this level with authority, come back up, test it as support, maybe consolidate, whatever, or touch it, and then take off. So that's really what you want to look for with Ethereum. This level is very important. If we reject this level, so if we pull one of these, man. If we pull one of these where we come up here, maybe we flirt with this level a little bit, don't get much done, and then come back down, or we just completely just reject it altogether, man, that's bad news. That's not looking too hot. And that's when you start looking at Ethereum around $150 at that point. So yeah, it's kind of what Ethereum looks like. Litecoin, I feel like Litecoin was entering some type of accumulation phase. I don't think I tagged as redistribution. It could have been. Oh my. Oh yeah, this is a lot happening right here. So actually, I said this was redistribution is what I'm looking like it's labeled as. Same thing. You have this up thrust. Now we're here. We're near the middle of the trading range. And you can look at my notes like as I read. Upper wicks, those are where you like get aggressive bulls before you trap them. No volume on this up move, pitiful, and then a huge spike in volume on the down move. Again, we're kind of going sideways, no volume. We're trending downwards as far as volume is concerned. So this might be a little accumulation phase. I'm sure if you go to the 15-minute or the 5-minute within this larger consolidation, you have this consolidation. Just at first glance, this looks like it's accumulation. So I'd expect us. What exchange are you looking at for USD pair? Bitfinex. Just because I know Bitfinex has a lot of volume. And so I'm looking at kind of like an upward move here, maybe test the top of this trading range, and then for Litecoin to go back down from there. There's like the volume, the activity here just doesn't look good. But we'll see. You really have to, the thing about Wyckoff is it's very hard to catch knives, right? The idea is that you're looking for the activity to occur and then the breakout or breakdown and then a retest, right? So if you're looking at Wyckofian accumulation or distribution, this is a no trade zone for the most part, or you can add like partial positions. So this is accumulation, and let's say you've identified that as accumulation. You can go long here, but maybe with only like a third of your total position, and then maybe add up until you get to your total here. But other than that, you're looking for the breakout first, the pullback, and then to take off. Same thing with distribution. You're looking for the breakdown, the pullback to retest support as resistance, and then you're entering here on the pullbacks. So that's why it's very hard to call anything accumulation or distribution before it happens. But you can start to become more prepared this way. So again, I feel I may have called phase C a little too early here, jumping the gun. I'm still learning. But yeah, so that's really what I'm looking at for Litecoin. Not looking too good. I wouldn't go long off of this. Maybe if you want to zoom in and just look at this price action, you would go long. But overall, I don't know. I don't know if I would want to. I would definitely be more inclined to short than go long here. Mainly because of this right here. This thrust upwards on shitty volume. That was a horrible sign. That was a horrible look. So yeah. Also to go back, actually, we do want to do a couple more things with Bitcoin. Also to go back, somebody asked like what exchange do I use for looking at USD pairs? I mean, pretty much for all pairs, I try and look at the charts with the coin or the trading pair that has the most volume. So for Bitcoin, that's Bitfinex. For the most part, for a lot of alts, Binance tends to have the most trading volume. If it's on Bitfinex, it may be Bitfinex. It just depends. You can always go to CoinMarketCap and look at what has the highest traded volume. But that's pretty much what I like to look at. I don't like to use BitMEX. In general, I'm not going to say because I've just showed you a number of BitMEX charts. I'm not a fool. But I generally like to look at Bitfinex and not BitMEX because margin trading will fuck you up a lot. Bitfinex has margin trading, but it's not like I think what the max is like 3.3 or something like that. It's not a lot. You can't do like 100x on Bitfinex like you can do on BitMEX. And the reason for that, and I've explained this in a previous video, basically what trading on leverage means, you're trading with borrowed money. And so if I have $10 and I trade on 10x leverage, or actually this is a better example. If I have $1 and I trade on 100x leverage, then when I make the buy or sell order, what it looks like is $100 showing up on volume, but it's actually just somebody with $1, right? That other $99 was what they borrowed on leverage. That's their margin, or I guess it's not their margin, but they really only have $1, but it's showing up as $100 in volume, right? And that's why like sometimes looking at BitMEX charts can get a little funky because of the way volume works with margin trading. But yeah, so I did want to go over just like some basic RSI stuff. It's my MACD that I use, 31016, but let me look. I want to look at, I like the smooth stochastic RSI. Works the same as the normal RSI, but takes out a lot of noise. Or Stoke RSI. And then the log space RSI. So if we're looking at this, volume not appearing on my charts, no, never. If I'm looking at like a Forex market, which I've been trying to get into Forex a little more, sometimes some exchanges don't keep volume just because of the way currencies are calculated. But nah, never in crypto. It's never been an issue for me. So yeah, let's look at the strength. I'm going to mark these. This is the 50. Very important. These tell you the strength of the trend. So this is a long entry signal for many people. The Stoke on the previous couple daily candles crossed above 50, the fast Stoke. And now you have the short or the slow Stoke also crossing above 50. If you're looking to go long, this is great. This is what you want to see. You want to see momentum crossing 50. Now on the RSI, like this. Well, first, if you don't know, the stochastic RSI is a measure of the RSI, and RSI is a measure of price, right? So Stoke is two derivatives away from price. A lot of people use it for oversold, overbought, entry signals, etc. And it can be. I'm showing it to you for a reason. I use it to some degree, but do understand that it's like RSI is calculated from price. Let me actually show that a little better. Merge up, unmerge down. So this is basically like if you're looking at this a math problem, this is a first derivative, this is a second derivative. So, but this is good if you're looking for bullish momentum. You kind of want to see the RSI cross above 50 because right now it's under 50, which lets you know the momentum is bearish. Zooming into the 4 hour. This is very bullish for a 4 hour scenario. So a lot of people want to call this an overbought condition. I would not. I mean, it is overbought, but overbought, like I said, is not a trigger to go short. Because you can see if you went short as soon as we got up here, you'd be short for 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, and you'd be underwater. You'd be underwater from 6.8K, right? So it's just like, don't do that to yourself, right? Like overbought and oversold conditions are not triggers to enter a trade. This is really where the Stoke shines. This lets you know the bearish trend is strong, or the bullish trend is strong. Because you can back test it and look, right? When we were going down, when the Stoke was like underwater below 20, I mean, it almost touched zero. Shit, it did touch zero. Like this just meant bears were in full control. Again, during this uptrend, the Stoke is lingering above 80. This does not mean overbought. It means bulls are in control. Like, please understand that. That's critical. And so this basically just means bulls are in very good control. And if you actually zoom in, you did have this bearish cross, which isn't good. But definitely room to recross above 80. But if we cross below 80, that would be a sign to possibly close along if you have one. And then looking at the 1 hour, RSI is above 50. Lets you know bulls are in control. We've actually treated 50 as support ever since we broke up above it. So that's good. And now what you have is the Stoke looking like you're going to look for this to cross 50. So turn on your 1 hour Stoke and look for it to cross above 50. And maybe add to your short. That's what I might do. Yeah, I think I might do that actually. If I'm still short, I don't know if I got stopped out or not. It was a small short, and it had a really tight stop. So I mean, we'll see. That's really all that's on that. Some things I think you should look out for. Pay attention to this pitchfork. I draw this pitchfork all the time. I don't know why more people aren't looking at this. So that's kind of like where we're at right here. You see we tried to break out, got denied, came back, cut up the median line a little bit. That's how you know you have a good pitchfork, when the median line is a magnet and you want to look for price to deviate from that. So it looks like we're about to try and break out this pitchfork again. I might be looking to short around here or definitely close my long. But yeah. And then the very last thing before I get off, been talking for a while. I'm going to look at the highs. I'm going to draw this wedge people keep talking about, or at least how I would draw it. Actually, the way I drew it, we broke out of it. So, I mean, but this again, something to look forward to. So that's a wedge, or the top part. If you want to connect that bottom, Let's see. I don't really like that bottom. If I had to draw a wedge, this is how I would draw it. Oh, my bad. I'm messing up. I gotta change this to low. So yeah, this is how I draw. I try and draw them unbiased. I turn on line, turn on highs, so it only shows me the high prices for each period, and then turn on the low so I can see. But yeah, maybe that's how I would draw the wedge if I had to. I didn't really see the wedge at first, wasn't a big fan of it, but and then I'll turn the candles back on. And so this is how I would draw the wedge. This is what it will look like. I had this identified as a bull trap for people thinking we were breaking out. I think that actually matches up when we tried to test the top of the pitchfork and got rejected. And then this, I don't know. Give yourself some room for error, a little deviation right here. But yeah, this is what I'm looking at. And so if you're looking at this wedge, you see this breakout, but I actually have volume turned off, which is uncharacteristic of me. But I'll turn that back on. You want to see a shit ton of volume. Like you want to see heavy, you want to see volume like this if we're going to break out the wedge. And so we see this breakout, but we're not really like too convinced. So, as far as volume is concerned, so I'd be careful about going long. And then if you actually want to take that bull trap into consideration, we haven't broken out the wedge yet. So another thing to just look out for. And that's really all I have. Nobody really asked any questions, so I'm assuming that's all there is to it. Yeah, I'll be very interested to see like what this weekly candle looks like next week. I'm predicting. Do I even want to make a prediction? I don't know. You make a bad prediction, people come for your head. Yeah, no problem. No problem. I'm predicting it'll be a black candle. I think it'll be down. Either that or it'll be a very small upward green one. It really just depends on where the price action comes and how we react to this level. But yeah, that's really all there is to it. I appreciate y'all, man. And I will catch you all later.